Time for another stock review. This is Core and Main, CNM. This is another stock been requested by one of our members. A very interesting industrial style stock, this one. Can you make money from this? That's the question. So we're going to go through the numbers and analyze it right now and see if you can actually make money from this stock. It's a new one. It looks very good. It follows the S&P pretty well. You might like it if you're like me, like good solid investments that do in fact follow the S&P. Anyway, during this review, you're going to get the most honest review you're going to see on online, because I'm using the most advanced algorithmic software. I only own the S&P. I'm not in any stocks other than the S&P, so I'm not pumping and dumping it. I'm going to share with you the balance sheet, the profit, the loss. I'm going to share with you the inside trading, who's buying, who's selling, a profitability score, a solvency score, the sentiment around the stock, the full balance sheet, the whole thing. Inside trading, did I mention that? I probably did. We're also going to look at the website as well. We're going to look at the website, further information, do a back test against the S&P 500. All of that's coming up. Latest news, latest information, why you might want to invest in this one. So let's do it. This is from one of our members. And we also have a Meet the CEO series. CEOs like to be on my show. They say they like the way we do it here, much more friendly and approachable than Bloomberg and Mad Money. With Jim Cramer, and we've had several already on our show and many more lined up to come in the future. So without further ado, let's get straight into it. If you like this video, please tap the like button and hit subscribe and ring the bell. Now, if you are an investor or you work at the company, I will tell you in a moment how you can get the CEO on the show and engage and share this video out, because I'm very sure, I'm very confident within days or a week or so we'll rank for this one. We rank number one for most of our stocks on YouTube now. I'm sure this will be the same as we're ranking for the word stock now. So something stock like CNM stock perhaps will rank for that, and it will draw attention to the stock. All right, let's get straight into it. There's an interesting one, this one. Let's start off nice and basic and simple, and then we'll get into more detail as we go on throughout the video. So first of all, as you can see, over time, since 2021, steadily go, and now we're up, as you can see, over time now, 166%. Very nice indeed. What is Core and Main? Let's zoom in and have a quick look, because you might guess what it means. Core and Main is a specialty distributor focused on water, wastewater, storm drainage, and fire protection products, which is interesting because I think it was requested by Jason, who is installing fire equipment. It's a good way to invest. Things you understand, things you work in, because you understand the business a lot more than most. There you go. Fire protection products and related services. The company provides infrastructure solutions to municipalities, private water companies, and professional contractors across municipal, non-residential, and residential end markets nationwide. The company was founded in 1874, so it's been around a long time, even though it's recently public, and is headquartered in Lewis, MO. The listed name is CNM, which is Core and Main, 1874. Very nice indeed. Only recently it looks gone public. We like that. Missouri, United States, 5,000 employees dead, not 5,001. 5,000 employees. Stephen O. Leclerc is the CEO. Now, Stephen, you'll probably hear about this video and this analysis online. I would love to invite you on the show. We've had many on before, and there'll be many after you, I'm sure. Please come on the show. Tell me all about your business. I don't own it. I only own the S&P. I don't pump and dump it. But what I would like to do is share your story, your business with the world. Now, if you are an investor, folks, and you'd like Stephen O. Leclerc on the show, what do? You can take this video and share it on social media. You can create a Reddit group around the business, and I will provide you all the content for your group and help and support you so you can grow online, build a family around this. Email investor relations. I'll also give you an invitation video. It's called Invite the CEO video. You can attach with this one to send off to the CEO so they understand what the invitation is. But it is open invitation. Would love them to be on the show, but I leave that to the investors. I never message anyone or go cap in hand saying, come on my show. We don't do it that way. We always undersell and over deliver. We don't promise or promote anything. We just do our thing on our own channel. If you'd like to tell them about what we do, please do. And then when they're interested, then let me know, and I'd love to have them on the show. Right, if you're buying this on margin, it's the lowest risk, 25%. No real worry here as far as margin's concerned. It's the lowest risk. Average volume, 3.73. Today's volume, 1.6. No dividend yield. So low volume. Perhaps it's just a buy and hold sort of stock. I think it is from the initial initial look at it. Price to earnings ratio, 26.96. It makes money. How expensive is it? Is it the price to the earnings ratio? Well, we'll need to compare that to the rest of its competition, and we'll do that later on in the video. 52-week low, 20.62. 52-week high, 58.24. Okay, so right now we're at 57, so we're sort of in the top range at the moment. Okay, Morningstar is saying buy. It's a strong buy by Morningstar, 80%. But I don't like to use Morningstar. They're paid to say these things. I don't like this kind of thing, but it's useful as a starting point. I'll do my own review in a minute, much more honest, to be quite frank with you. All right. Okay, then we have the valuation. We have the earnings, as you can see. They keep, well, actually it's 50-50 between Wall Street being right, getting this right. They have surprised Wall Street, and they've missed with Wall Street as well. Remember, the expectations, the estimates is done by Wall Street, not by them. They're not saying we're going to do this. That's what Wall Street say. And then when they miss it, of course, we miss the earnings or we beat the earnings, okay? So it's kind of up and down, this one. It's not steady or whatever. It's always making money, but it is bouncing around. But since 22 of Q4, we've seen it rise until recently, Q4 23, it dropped off. Why was that? Well, hopefully we can find out later on. The estimate was 35 cents per share, and actual was 34 cents per share. So it had dropped a lot from the last earnings of Q3. Who else is buying this stock? Broadcom, Applied Materials, Supermicrocomputer, CrowdStrike. This gives us an idea of how it might trade. These are all good, solid companies, as you can see. These aren't penny stocks. This is a good, solid company. Obviously, it's a good company with others. We've got no Mullins and scam stocks in there. So this is a good, solid business from the standpoint of who else invests in this. So you're not going to get the nonsense that you're going to get with penny stocks and all the rest of it. Okay, let's move on now and see if we can find out more about the company before we go into the proper details and the money of it and the money side of it. Please do smash the like button, leave me a comment below, and I will reply to every one of my members' comments. All right? Okay. Let's now look and see if we can make any money from this company. What do you think of it so far? Is the money stacking up? Are you scratching your chin and thinking, I kind of like this? Well, let's look a bit deeper. Here we go. About us. Our specialty products and services are used primarily in the maintenance, repair, replacement, and new construction of water, wastewater, storm damage, and fire protection infrastructure. Through our network of approximately 335 branch locations in 48 states across the US, we serve as a crucial link between approximately 5,000 suppliers. And that's interesting. They've got 5,000 employees and 5,000 suppliers. There we go. One employee per supplier, and a diverse and long-standing base of over 60,000 customers. The vision to foster a world where communities thrive because our people and products provide safe, sustainable infrastructure for generations to come. And our mission, what's our mission? We are an industry leader supplying local expertise, service and products nationwide to build innovative water, wastewater, energy and fire protection solutions for our customers and the communities we serve. Okay, that's some general information. Why Core and Main? Why would you invest in this company? Well, this is what they say. We are a market leader in market leader with size and scale in an attractive and fragmented market. We have a strong value proposition and play a pivotal role in shaping our industry. We have multiple levers for continued organic growth, continually cultivating ways to grow growth faster than the market and gain share. I will leave the rest of that on the screen. You might want to pause that and look at the rest of their statements. Okay, let's move along. We're going to get into the numbers in a few moments. This is some news just out, just a week or so ago, some news. Core and Main signs agreement to acquire ACF West Inc. Okay, we'll read the first paragraph of this. A leader, St. Louis CNM. Thank you, Jeffrey, for your subscription. Appreciate that. This is being made during a live show. A leader in advancing reliable infrastructure with local service nationwide has entered into a definitive agreement to acquire NW Geosynthetics, doing business as an ACF West. ACF West is a leading distributor of geosynthetic materials and provider of soil stabilization solutions with 6 locations in the Western United States. We are excited to grow our geosynthetics footprint across the Western United States through the addition of ACF West. Together with their talented team, we will extend our distribution reach and enhance our geosynthetic product and service offerings throughout the region, said Steve Leclerc, Chief Executive Officer. We mentioned him just a few moments ago. Additionally, their expertise in engineered solutions will enable us to provide our customers with access to a wider range of capabilities. Latest news from the company. Okay, and there's the homepage. Just wanted to share with you how the website looks. Okay, now we know a bit about the company and what they think of themselves and why we perhaps should invest. Let's see if the money stacks up. At the end of the day, if the money doesn't stack up, we can't turn the money printer on. We can't make any money. So before you get your credit card out, Mr. Jordan Smith, and buy this stock, we need to look over the numbers. So let's do that right now. Let's go over to the numbers and see how this stacks up by first of all looking at the intrinsic value. All right, okay. Tap the like button if you like this video so far. Leave a comment. I will reply back to you. Okay. I'll also provide you with the link of the software I use, which is the most advanced software. My members get a free plan or a lifetime discount plan. Okay, here we go. It's saying it's overvalued. We're overvaluing at 19% or 25% undervaluation at the best case, but the base case, which is what we like to go on, is overvalued by 19%. Worst case, overvalued by 42%. Okay, there's an idea. Now, the valuation seems pretty reliable, pretty accurate. No warnings here. What is an intrinsic value? You might want to pause it there and take a read of what an intrinsic value is. I'm very mindful of your time and realize not everyone has to have it explained every time. Run a back test, the intrinsic value, and let's see it in real time as we process this. The correlation between the price and the valuation, 1%. So there you go. Again, you might want to pause that and zoom in. There's a lot of information there. Now, we've just had the Q4 earnings. I'm going to pick up what was said on those earnings. The company forecasts its net sales to reach between 7.4 billion and 7.6 billion in the fiscal 2024, marking a 10% to 13% increase year over year. Very nice. Adjusted EBITDA projections lie between 925 million and 975 million, indicating a 2 to 7% growth. An effective tax rate around 25% is anticipated, with plans to convert 60% to 70% of adjusted EBITDA into operating cash flow for growth and shareholder value initiatives. Okay, there's the general headlines from the last earnings. What about the financials? 6.6 billion on the most recent range. That was in October 23. Okay, and now we're moving up. January 30th, we're expecting 6.8 billion and then we're expecting to see that increase over the most recent range. We're up 0.1. It's not growing massively, the expectations, but we are moving in the right direction. Operating income is down 2%. It looks pretty flat, really. 362 net income is up 0.3. We're expecting a bit of a jump on the next one in January, of course, just gone. The cash flow is negative 34%. Down. 201 million is the investing cash flow, which is negative 23%. Operating income, which is good by the way, it's in green. Operating cash flow is positive 25%. That's very nice indeed. Let's now look at the balance sheet. If you tap the like button so far, if you do, it will share the video out. If you don't like the video, please click the down like button. I don't mind what you do, just do something. Okay, what about the balance sheet? 5.1 billion in assets and 3.3 in liabilities. Good. We're not upside down, more assets and liabilities. 101 million in cash. Let's look at our debt position. 3.3 billion in liabilities. How much of that is long-term debt? 1.4, which is 43%. So we've got a bit of debt here. So with interest rates coming down, this business can get a nice little catalyst for a boost. However, it does have long-term debt of 1.4 billion, and we do have 101 million. So we can't pay our debts off at the moment, but it's manageable, I would say, at this stage. But nevertheless, we do have a sizable amount of debt on the books. Okay, let's move down. The margins. Now, the margins are very important. It's the moat around the business, how it can see off competition. In a moment, I will give you a link for the competition. You might want to go and look and see what the other what their competitors' margins are looking like. But we've got positive margins. We're not losing money. We're making money, of course. This is a good business. 27% gross margin. Again, we can't tell if that's a good or bad margin until we compare it to the competition. Gives us an idea. But nevertheless, we've got good margin. We've got margins. We're making money, and that's all looking pretty good. And steady growth is anticipated. If be it not massive. Anyway, profitability is good, is pretty good here. We've got exceptional 3-year growth, positive gross profit. We're just amber though on the positive 3-year average ROE and positive ROE. We're amber. We're not red. We're amber. If we were green, we'd be up in the 65-70%. But 55 is still pretty good. We've got all ticks here for the solvency. 48% solvency. So we've got a bit of debt, but the business isn't going bust. It's got plenty of money to sustain it. So that's good. You can invest knowing it's not going anywhere. Okay, now then, Wall Street, they say 51% downside at the worst case scenario, 13% downside on the average, and a 25% upside at the best case scenario. Again, it looks a bit overpriced from where it is now. It does look a bit expensive from where it is now. You might want to get this around about the $50 mark. Then things might look a bit better for you. But right now at 57, 58, where it is now, it's a bit expensive, perhaps. There's the competition. Now, if you want to go and compare with the competition, click above my head or down below in the description. I'll give you a link to the software that I use, which is the most advanced algorithmic software. My members can get a discount that will basically make my membership for free, or you can get a limited free plan as well, which is great. Nobody else offers that deal. And you can then go through the competition and see what their margins are looking like. Now then, we don't like to see this, hence why it's too expensive right now. It's being sold off. Insiders are taking profits. In the last 12 months, insiders have not bought any shares and sold $746.4 million worth of the stock. So there you go. You can see insiders are selling. Admittedly, it's scaling back now. We're kind of done with selling. So perhaps the next round is buying, but I still think it's a bit expensive. So we don't like seeing insiders selling their stock, of course. What about a short position? Well, for a company like this, which is a solid, in a minute I'll show you, it follows the S&P a little bit. I'm surprised it's got so much short interest. perhaps that can drive the price down a little bit and we can get a bit of a discount. 8.51. Don't expect a short squeeze. We've got nowhere near the volume and nowhere near the amount of short interest. So no pop on a short squeeze. That's not going to happen here. This sort of stock, I doubt, would do that anyway. All right, let's move on down. No latest news. Not many people are talking about this stock. That's why I've said I think we'll rank number one very quickly. It's not getting much media attention. It will now. Our review will be right here on Alpha Spread. They put every one of my reviews on their website, so I'm sure that will get it played here. Okay, 100%. Because I know the CEO, he loves what we do, and he'll put it on the website, no doubt about it. Right, so there we go. That's the information there. Now then, let's go over to a back test of the company, compare it to the S&P. As you can see, look how it trades alongside the S&P. Now, but slightly better though, from 22. Admittedly, only a short period of time that's been public, but nevertheless, look how it's followed the S&P, and then when the S&P goes up, it kind of goes up more. When the S&P goes down though, however, it kind of goes down more as well. It kind of exaggerates what the S&P is doing. You can see it going up here, it goes up more. The S&P going down, it goes down more. It kind of like, exaggerates it slightly. You might like a chart like that. It's very interesting, all right? So what do I think of this? Is it worth an investment? Well, I would like to learn more about the company. I'd certainly like to know more about it, but it's got a pretty good balance sheet. I would prefer the price to be around about the $50 though. Then perhaps, but even though it follows the S&P, I would prefer, for me, the S&P anyway. I'd need to know more about it, but this isn't bad at all. I would like to see the price come down and get it at $50. Maybe then that would be a good entry point. Wall Street don't give it enough of a boost really for it to make for it to be worthwhile. I don't think at this price. If we just look at it over the last 3 months, it's continually going up. It's getting a lot of, it's getting bought up at the moment, a little bit overbought. Insiders have been selling. Not enough short interest to drive it up, but even so, the short interest isn't really bringing it down either. So it's obviously got good strength here. But for me, I'd be wanting to get it at a better deal. There's no dividend here. There's no technically free money, and considering that we've just missed on the last earnings and the growth forecast wasn't amazing, I don't know why, quite frankly, it's going up so much. I would rather wait for this. So for me, it's not a buy right now, but it's certainly a solid company, been around for a long time with good history. Click above my head for all the links, down below for all the links. Down below, you'll also find the link to my membership where you'll learn all about membership and what you'll benefit from and how you can get this software for free or a premium service, how you can become a member and have your own reviews done. It's just one of the perks that you get. Also, our extra channel, which runs all the time to support this channel, soon to go 24 hours a day to provide service and support to everyone. So there's that. And I think that's about it, right? Okay, over here you'll find more reviews. I've done over 100 reviews now, many reviews, and the Meet the CEO series as well. That's it from me. So click above my head for all the links down here, over here, and over here, and another review done for one of our members. Until next time, as always, take care of yourselves and each other.